The following demo is designed to give you a good understanding of some of the features of the Invenio Content Financial Solution and demonstrate how the solution delivers business benefits such as strict budget controls, real-time reporting, and more efficient financial processing. Built on SAP, our solution focuses on the financial management process across the many departments who play a part in content creation with detailed financial planning, control, and reporting at its core. Departments such as finance, marketing, production and operations, who previously work in silo, will now work on the same system, improving transparency and efficiency. So, let's look at an overview of the system components. Here we start with the concept approval form. When a member of the team comes up with an idea, they need approval from superiors. The concept approval form is an efficient way to showcase an idea across the pre-designed workbase for feedback and approvals. Once this concept approval form is confirmed, it will be approved and developed into a deal memo. The deal memo is a summary of the concept or acquisition and goes into budget details, production house choices, lead talents and staffing contracts. As with the concept approval form, the deal memo will be processed for approval with all comments, approval and rejections tracked and viewed on the system. Once the deal memo is approved and the standard SAP elements have been created automatically, procurement falls into place. POs will automatically be created, and once the service has been delivered or rendered, the service receipts are created and subsequent invoicing posted automatically. Inventory recognition is an important step, as this inventory will soon become IP on the balance sheet. It's at this point the inventory recognition and amortization principles are defined for the organization. Now, with the basic understanding of the system components, let's have a look at the solution. In this demo, we'll be showcasing some key features to the solution, including the concept approval form, deal memo, milestone achievement, mass SRN posting, content receipt, inventory recognition, and amortization. Most of these stages are developed by Invenio, with some standard SAP Fiori applications such as My Inbox, procurement, invoicing settlements, and amortization. From the Launchpad, we can access the concept approval form. I've created a concept already using the TV series Underworld as an example. Content type is the program, the content category is regular, and the nature of the program is co-production. So as you can see, this is a collaboration between in-house and third-party production houses. Each concept will have its own unique number, which is the concept approval form number. In the first data field, you can enter what the new content will replace, which in this case is Action League Now. The objective of the program is Buzz, and the estimated release date is the 1st of May 2017. The genre is drama, the currency in which the production will take place is USD, the content subtype is fiction, and the proposal is for 15 episodes. The estimated budget is 9.8 million. The average duration per episode is 1 hour, and the producer is James Paul. The next stage is the concept tile, which is a central part of the concept approval form. It's within the concept tile that the creative department will document at length what the concept is all about, including a synopsis. Anticipated schedule and viewership ratings, expected telecast day can also be entered at this point. With these details added into the system, average viewership ratings can also be calculated. Here we can also see any comments that have been left by the initiator or approvers. Next part is the release status, and it's here we'll be able to see the audit trail. Once the concept approval form is ready for approval, depending on the approval matrix, it will usually go through 2 levels of approval. The first level is usually the channel head. Once he is in agreement, it will proceed to the second level, which is the CEO or CFO. As you can see, the process was kicked off by the initiator today at 11:21. The channel head approved it at 11:22 and CEO at 11:23. Once the concept is approved in principle, the budget is still at a broad level. This will be amended in the deal memo as negotiations are finalized. So now the CEO is approved, we're now in a position to create the deal memo. So let's see how it appears. As with the concept approval form, every deal memo has its own unique identity generated by the system, which you can see here, and in brackets you can also see the version number. The version number will change as the deal memo gets updated with artists, vendor, production contracts, budget changes, etc. Any changes will mean a new version has to be created, so this is the first version after the approval of the deal, and the status is locked to approved. At the top you can see the reference number, which is interlinked with the concept approval form's unique number. The details at this stage are more or less the same as the concept approval form, such as the objective, genre, number of episodes, release date, currency, etc. The only additional field is the amortization, which details the amortization logic or principle that is to be adopted. In this example case, the organization is going to deplete 100% of the inventory cost once the content has been utilized for the first time. We'll come back to amortization later on in the demo. Next are the budget details, which come in two parts. Firstly, the production house budget, which is the third-party production house or vendor costs. The second part is the in-house budget. Both of these budgets are configurable depending on the organization needs and industry standards. Here you can see the license fee, which displays the fees for licenses of the content. Then the format fees, if you're acquiring any format. Talent or crew fees can be entered here, and any miscellaneous costs are here at the end. Now that the costs have been entered into the deal memo, the system apportions this cost equally across each of the episodes. A decision was made to create 10 episodes instead of the proposed 15, so the budget reflects $980,000 as the budget per episode. So with this we go onto the next tab, which is the Talent and Crew Contract tab, where we've created the artists' contracts. In this season of Underworld we have two main talents, who are Roger Gomez and Samantha James. Each artist's contract has more detail, such as milestone payments. So let's click on Samantha James. The total talent and crew budget was $2 million, out of which this particular artist has a contract value of $100,000. As you can see, we've allocated some of the available budget for the artist, but $1.8 million is still available. Here we can see the milestones that have been negotiated with this particular artist, Samantha James, who is associated with all 10 episodes. So per episode there are two milestones. First is a 40% advanced payment, which is to be paid up front for each of the episodes, and the second is 60%, which is to be paid on content utilization, so when the episode is aired. Naturally, this depends on the organization and how they've negotiated milestones as to how this is configured. There can be many more milestones than just two per artist. So once the talent contracts are created, the next stage are the vendor contracts, which in this case is Real Productions, who produce Underworld. The production house contracts are more elaborate compared to the artist contracts, with details such as cost per episode, which in this case is calculated at $700,000 per episode. Again, there would be negotiated milestones, which in this case is 30% of advances, then 70% on receipt of content. We also need to mention the format the content will be delivered in. For example, high definition with Dolby, Digi-Beta tape, or another format such as downloads. As and when the content is received, the delivery date will be updated in this section. This is an important step, as the delivery date is linked to payments. Next is the rights information, which we capture here. The start date is the date of telecast, and here is when the validity ends. It also details that only 3 runs are allowed. Certain organizations run on different accounts, as they have their statutory reports and management reports. So here we can manage different treatments for amortization in parallel books of accounts. The leading and non-leading amort amounts allows you to keep track of both types of accounts. Lastly, we can see here that the territory is restricted to America. So this is the vendor contract. The next part is the schedule and viewership ratings. We can see this program is being scheduled for the weekend, and we have the total content hours and the budgeted viewership ratings here. On this basis, the revenue department enters the average broadcast revenue for 30 minutes and the other total revenues. There'll be other sources of revenue they're expecting, so it's a lump sum with anticipated cost and revenue that you can see here. As you can see, there are different departments working together on the system. The commercial team can now enter the budget-specific information, the revenue department contributes to the revenue-specific information, the marketing department enters the marketing budgets, and so on. This now provides the basis of the P&L document, which allows the stakeholders to make decisions such as if the content needs to be created in-house or if it would be more cost-effective to outsource. Now looking back, we can see the audit trail, which includes the initiator who kickstarted the project, the budgeting team, the commercial team, marketing, revenue team, channel head, CFO and CEO comments and approvals. So this is what goes into a deal memo. Now the budgets have been assigned in the deal memo, POs have been created, and services are being rendered. We can now start booking expenses. Before any payments are released to the vendor, we have to enter the Milestone Achievements. This means we have to tell the system that we've arrived at a milestone and some payments are to be made. So let's do this. The channel is CCI Television Networks, who produce Underworld. I've updated the 1st to 5th episode on today's date. The system will now prompt the user to see if they want to do the milestone achievement for the artists or production house. So for the moment, I'll update the production house details as I have to pay them 30% of advances. The system fetches the record and confirmed 30% is the advance percentage, which is $210,000 to be paid off to the production house. So the milestone date is the 3rd of May, which is the trigger point, and the system is free to release the payments linked to the milestone. Once I click Save, the subsequent processing will be done automatically. Mass Service Receipt Note Posting is a standard SAP transaction which we've automated for the purpose of this solution. I'll be recording the service receipt note for episodes 1 to 5. Since it will trigger an accounting entry, I have to enter the document date as well as the posting date, which I've done on the production house contract. Once I press Post, it will now give me a message that the service documents have been posted successfully. As the system has been automated for the content financial solution, we've cut out 3 or 4 pages of navigation. In this case, I just have to select the correct broadcaster, channel or production house, and then all the data process is automated. Here's an example of someone trying to overshoot their agreed budget. I've entered an amount which is more than my allocated budget. Once I try and press Submit, an error message pops up and tells me I can't proceed any further. For me to get this approved, further budget will need to be agreed and updated on the system. The inventory recognition is programmed so that once I've received the content, I'll be able to recognize my inventory. If you remember, the inventory recognition policy was 100% of the inventory recognition once the content had been received. So now we need to specify to the system that we've received the content, which is done in the Content Receipt tab. I've received the content for episodes 1 to 5. The system defaults to today's date, and I can enter a remark, such as, I have received the tapes and they're in good condition. Then my content receipt is confirmed, and the inventory recognition will progress. We're now going to look at inventory recognition as the content has been received and the inventory is good to be recognized. I'll do this for episodes 1 to 5. So the budget here was $980,000. The actual amount we paid to the production house was $210,000, so we need to provide $770,000 to recognize the inventory at 100% value. This is a calculation engine we've built, so the system will automatically provide the deficit value. Once I've posted, it says the document has been posted successfully and has provided the right amount of value. Finally, we come to the amortization part, which is a standard SAP transaction. This will post the depreciation of the inventory to the final books of accounts, a process usually carried out by the finance department. As you can see, episodes 1 and 2 have already been televised, and the amount has been recognized as the amortization has now taken place. Here you can see the book value stands at 0. For episodes 3 to 5, the telecast has not happened as yet, so you can see the inventory value is still at $2.9 million. So this was a demonstration of some of the key functionality of the Invenio Content Financial Solution, from creation of the concept to inventory recognition and amortization. As highlighted in the demo, the solution is highly customizable to individual company requirements, and with the in-depth knowledge of our media consultants, we'll be able to advise you on how this can enhance and streamline your business. If you'd like to talk to one of our media consultants, please call us using the contact details on your screen or visit invenio-solutions.com.